What if your home loan lasted 5 decades instead of the usual 30? Could a 50-year mortgage make that dream home reachable? Or will it trap you in debt for life? In this video, we're gonna dive into what the 50-year mortgage is, how it measures up to the 30-year mortgage, and whether this long-term bet actually makes sense or not. One of the most commonly asked questions right now is, will the 50-year mortgage actually lower the monthly mortgage payments? And is it worth doing so? That question shows up in discussions and articles as the main concern. For example, the idea is being floated around purely to make housing more affordable and kind of tackle that issue that's going on currently in the US. But first things first, what is a 50-year mortgage? A 50-year mortgage means a fixed rate home loan spread out over 600 months. So that's half a century of payments. The idea is to stretch the term longer so that way each monthly payment is smaller than it would be under a 30-year term. But long term also means that you're paying more interest overall and you build equity a lot slower. But let's look at the history of a 30-year mortgage. The 30-year fixed rate mortgage became the standard in the US after the Great Depression and post-World War II era. Historically, the average rate for a 30-year fixed loan has been around 7.7% from 1971 to 2025, though recent rates are lower. The 30-year term caught because the monthly balance payment with the affordability was within the goal of paying off a home before the retirement age. But let's look at the 50-year mortgage in comparison to a 30-year mortgage. Is the 50 actually a good idea, or is this just a horrible idea? And let me know what you think in the comments below. Under a 50-year term, monthly payments would be a lot lower compared to a 30-year mortgage loan. For example, on a $400,000 loan at 6.5%, the payment might drop from about $25.28 on a 30-year mortgage to about $22.55 on a 50-year mortgage. So it does decrease, and when you compare that over 30 years to 50 years, there's a significant difference, but is it enough to actually make sense? And to determine that, let's look at the cost. The total interest paid over 50 years could be far higher. For that same example, $953,000 in total interest for a 50-year versus $510,000 for a 30-year mortgage. That's a pretty big difference in interest paid. But let's also look at what equity you're building over that time frame. After 10 years, a 30-year borrower might have $81,571 in equity. Under a 50-year term, only $21,636. So in addition to more interest, you're also building your equity a lot slower. Is it worth the cheaper monthly payments in return for less equity and more interest? In a 50-year mortgage, almost every single payment in the early stage is going towards interest, not even principal. So I'm sure you're wondering, how could a 50-year mortgage actually be good? Well, let's go ahead and review how it could be beneficial to some individuals, because it's definitely going to be a case by case. And to be clear, this is not yet an option. This is just something that's being floated as a potential option. First things first, you have the lower monthly payment, which could be beneficial for someone who is trying to get into a house but can't yet afford the monthly payments at a higher rate that is currently at a 30-year mortgage, but could afford it at a 50-year mortgage. You could also argue that it creates flexibility. Now, if you're an investor, the interest, I don't think is going to be worth it to hold for short term, but if you need flexibility, let's say for 10 years, it might be an option worth considering for lower payments. So again, it's going to be a case-by-case study depending upon your individual needs. And I guess you could also use it as a interest-only loan for some borrowers, which again, case by case, there's some borrowers or buyers out there that are looking for an interest-only and it would benefit their exact situation. So I don't think this is going to be beneficial for everyone or investors, but those who are trying to have flexibility, lower payments, and still obtain home ownership, I think it could actually open up that door, which again, it's being floated because of the affordability issue that we're having in the US, which is why I'm not arguing against it. I'm just curious what your thoughts are. So let me know in the comments below if you think it's a good idea or bad idea, because let's also review how it could be a bad idea for some buyers. As I mentioned, you're paying more interest over time. In addition to that, you're building equity a lot slower. And the other aspect of it is if you calculate the inflation, does it really solve the Affordability Act? And that's the thing that I'm questioning right now. And then there's also going to be a whole nother set of challenges when it comes to underwriting and insurance. And yeah, so I'm very curious to see how it's going to play out. I definitely understand why they're floating the idea. The 30-year mortgage wasn't something that was always around and ended up being something that became super beneficial. So I'm pretty neutral on it. I'm just curious what your thoughts are. I just wanted to break down what the idea is because it's a mortgage that would be paid over 50 years instead of 30 years. Pretty straightforward. But again, this is just an idea, not something that's set in stone. If you think it's a great idea, let me know in the comments below. If you think it's a horrible idea, let me know why in the comments below.